equity, mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast that follows our journey of investing. And whether you're an absolute beginner or approaching Warren Buffett status, our aim is to help break down your barriers from beginning to dividend. Now, if you've just joined us for the first time, a huge welcome. Thank you for joining the Equity Mates community, and congrats on starting your investing journey. If you feel like you need to get up to speed with the basics, check out our Get Started Investing podcast. With that said, my name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Very excited for this episode. We are breaking down a company that has influenced all of our lives and that most of us in one way or another give money to, or at least give our eyeballs that they get advertising revenue from.
A lot of attention.
And we're doing it thanks to Airlie.
That's right, Ren. Airlie has an active investment style that aims to deliver attractive long-term capital growth. And we're fortunate enough to have had the founder, John Sevior. We had him in the studio last year, and also one of their portfolio managers, Emma Fisher, has joined us a couple of times on the show, both two awesome investors. And we're lucky to have another portfolio manager in the studio today, Will Granger, to help us unpack News Corp. Will is a portfolio manager for the newly launched Airlie Small Companies Fund. They're investing in 20 to 40 stocks that they consider to be high quality businesses in the small cap space or small companies space. So,
And News Corp is one of those businesses. And so we're going to spend the first half of this episode giving a bit of a primer on the company, News Corp, what it does. And then Will's going to join us in the studio to talk about the investment side, the bull case, the bear case, and what the company's trying to be long term.
So for information on the Small Companies Fund, we'll provide a link in the show notes. You can go to the airliefundsmanagement.com.au website. And a reminder that while we are licensed, we are not aware of your personal circumstances, so any information is general and is for entertainment and education purposes. But Ren, with that said, News Corp.
So Rupert Murdoch's baby that he had to split in two in 2011, 2012 with the News of the World hacking scandal.
Yeah.
For people unfamiliar, News Corp is a media conglomerate with major divisions in newspaper publishing, book publishing, digital real estate services, and subscription video services. The company comprises some of the world's most recognizable and respected brands, including the Wall Street Journal, Barron's, The Sun, The Australian, HarperCollins Publisher, realestate.com.au, realtor.com, and Foxtel.
Some big names in there.
Most people in Australia would also probably be familiar with KO, with Binge, the streaming service, with the Daily Telegraph, your morning newspaper.
Haven't read a word in it.
Ever?
No, hate it.
Wow, that's strong.
Yeah.
And they don't even think about you.
That's fine. No qualms with that.
So News Corp is a media giant, and it's got massive news businesses in the US, the UK, and Australia. But when we look at it from an investing point of view, the newspapers, or all but one of the newspapers, don't really matter. But we'll get to that. Let's
have a bit of a walk down memory lane though, Renan, and look at the history, because it's a pretty fascinating journey, and one that, it's pretty amazing to see what Rupert has actually built. Established in 1980.
The News Corp was.
News Corp, yeah. But it all started back in 1952 when Rupert inherited an Adelaide afternoon tabloid called The News. I think his dad was running it at the time. And that was the beginning of the empire. In 1964, Rupert first publishes The Australian. In 1969, he expands to the UK with The News of the World, followed closely by The Sun. In 1973, he expands to the USA by purchasing the San Antonio Express and News. And then in 1976, purchases New York Post. So in 20 years, he's gone from Australia through the UK into the US.
Yeah. In the 80s, he buys the Times and the Sunday Times in the UK. And in the mid-80s, he moves into movies and TVs in a big way. 1985 buys 20th Century Fox and also buys Metro Media television stations and launches Fox Broadcasting Company. 1987 acquires Harper and Row, and in 1989 acquires William Collins' Sons, merges them together and makes the book publisher HarperCollins. 1989, late 80s, early 90s is when he really pushes hard into cable TV.
Yeah.
Launches Sky TV in 1989 in the UK, launches Foxtel as a joint venture with Telstra in 95. 96 launches Fox News, and American politics is never the same. This is my favourite part of the Rupert Murdoch story. In 2005, he buys MySpace for $580 million. Tom from MySpace is now living his best life.
Yeah,
if you don't follow him on Instagram, you should. $580 million in 2005. In 2011, News Corp sell MySpace to Justin Timberlake for $35 million. That's about a 95%, if my math's off the top of my head, 95% fall.
Unbelievable. I don't think he still owns it.
Justin Timberlake?
Yeah.
Who owns it?
I don't know. I thought he sold it. I can't remember who or where, but fact checked me on that. But
I'm actually just seeing if the website still exists. It's such a music website now. You go to it and the headline is Red Hot Chili Peppers, 9 Inch Nails, Slipknot and Kiss to headline Louder Than Life lineup. There you go. Anyway, completely unrelated to what we're doing.
So in 2007, Rupert buys the Dow Jones and Company, which owned the Wall Street Journal. 2011 was the News of the World scandal.
Do you remember what happened there?
Yeah, they were phone tapping.
Yeah.
Yeah, it was massive, which forced the demerger of Fox Corp and News Corp. And then in 2019, most of Fox Corp's entertainment assets in a massive deal was sold to Disney.
Yeah.
It's a story of mergers and acquisitions, bolting on media. It's huge business.
Yeah.
Yeah.
I mean, he was a very good media entrepreneur.
Yes.
This guy got media. The Bryce Lesky of his day, some may say.
Thank you.
So that's the history. Let's talk about what News Corp is today. And it is really a business of 5 segments. The first segment is its holding of realestate.com.au. It owns a majority stake. It also owns realtor.com in the US, which is not the biggest. Zillow, I think, is the biggest, but it's a real estate listing website. Subscription video services. So that's its streaming services and its cable offering. Foxtel still kicking along, but it's more KO and binge. And I think they have off the top of my head, I can't remember if it's majority or minority, but they own a stake in B Sky B, which was the merger of the two UK cable providers. Dow Jones is its third segment, which publishes the Wall Street Journal, but also has a pretty meaningful business to B2B data business. It sells like financial information. So that's 3. Number 4, book publishing with HarperCollins. And then number 5, news media. And that's what a lot of us would think when we think of News Corp. That's the Australian, the Daily Telegraph, the UK newspapers, the Times and the Suns, the Sun, not just one, there's just one Sun. And then, are there any more newspapers that I'm forgetting? Any of the big ones?
Don't think so.
Like the Herald Sun and stuff, but like nothing in the US. Yeah, now, somewhat confusingly, they never reorganised the company and put the Wall Street Journal in with the other newspapers. Probably because it's the star child.
Yeah. Well, as we find out from Will, it's light years in front of its competition. Yeah.
But that's the 5 businesses. Now, the really interesting thing when we speak to Will, he doesn't really factor in the print newspapers in his thesis, but they do bring in the most revenue. In the last financial year, they brought in $2.4 billion in revenue, which was the highest of those 5 segments. But they also brought in the smallest amount of profit, $217 million of EBITDA. And so that's really the story of the news business.
It's the story of media.
Yeah. Whereas digital real estate services brought in the least amount of revenue, $1.7 billion.
Being realestate.com and realtor.com.
Yep.
Yeah.
Their share of those businesses.
Yeah.
But it brought in the most amount of profit, $574 million in EBITDA.
There you go.
And so the story of News Corp is a story of a lot of assets, some probably higher quality than others, I think it's fair to say. And when we speak to Will, he really highlights the three that are the most important for Airlie and for him: Digital Real Estate Services, which is REA Group; Dow Jones, which is the Wall Street Journal and its B2B data business; and book publishing, which is HarperCollins. I was surprised that book publishing was such a big thing, because
me too.
Book publishing feels like an industry that is brutally tough and getting squeezed.
Yeah. Well, again, he mentions it in the second half of this, but books are on a bit of a resurgence, apparently.
Yeah, that's why we've written another one.
Yeah. Whoa. Stay tuned. So we should probably do a quick explain around on the share structure, because if you're Googling this and wanting to invest, you might find that there are a number of stock tickers available. So firstly, you have the News Corp listed on the ASX, and the stock ticker is NWS. You also have News Corp listed on the NASDAQ in two forms. One ticker is NWSA and the other is NWS. The difference here is really the class structure of the shares. So NWS in the US and here in Australia is Class B, and NWSA over on the NASDAQ in the US is Class A. So the difference being that Class A in the US doesn't have any voting rights. Class B here in Australia does.
And that's a way for the Murdoch family and the Murdoch Family Trust to own a smaller percentage of the total company, but maintain control.
Yeah.
Which is not uncommon. Google, Snap, a whole bunch of companies have different classes of shares.
Equity mates.
Yeah. But that's just something to keep in mind if you're getting confused about which News Corp you want to buy. Quick rundown on the financials, and then let's get to Will. Market cap of $11.2 billion, up 26% in the past year. Not bad.
Yeah.
Probably from all those KO price rises we keep getting.
Know. Gotta love KO though.
And then up 35% in the past 5 years, which is about a 6% compound annual growth rate for the share price. So a bit slower than the market.
Yeah. Revenues of $10.4 billion in FY22 and a profit of $623 million. Worth noting that 4 and 5 years ago, they were actually unprofitable. So they've been able to get back into the green, and a 6% profit margin. The New York Times, for comparison, has a 7.6 and Sinclair has 7.3. So there's a bit of a rundown, a bit of a history of how News Corp got to where they are today. A big thank you to Airlie for supporting this episode. We're going to now hear from portfolio manager of the Airlie Small Companies Fund, Will Granger. He's going to take us through what metrics matter when looking at News Corp, the bull case, the bear case, and then the long-term plans. And Ren has some questions around succession off the back.
Had to ask.
So if you're interested in finding out more about the Small Caps Fund, the Airlie Small Caps Fund, check out the links in the show notes. And without further ado, here's our conversation with Will Granger. Well, Will, welcome to Equity Mates.
Thanks for having me.
Now we're talking News Corp. So the first place we want to start is how to analyze a company like News Corp. What are the metrics that matter, and which ones don't when thinking about News Corp?
Well, look, in hindsight, I probably haven't chosen the easiest company for us to look at. As I'm sure you guys will be aware, it's News Corp isn't really just one business. It's really a collection of multiple businesses across the media landscape. So they own 61% of REA. They own HarperCollins, a book publishing business. They own Dow Jones, which owns the Wall Street Journal. A variety of other newspapers. 65% of Foxtel. So there's a lot to unpack in the business, and they're really individual businesses that need sort of individual analysis. So we can sort of talk about the metrics for each separate business. I even found out the other day they own 70% of the Brisbane Broncos, which I didn't even realise the Broncos were listed, but there you go.
Yeah.
Not being a star share market performer, the Broncos. Yeah.
It hasn't been too bad, but
really?
not amazing. But yeah, so I guess to simplify that complexity, there's really 3 key businesses that make up the lion's share of value for News Corp. Corp, and that is REA, their stake in REA, Dow Jones, and HarperCollins. So maybe to start, we'll focus on REA. I'm sure your listeners are very familiar with REA Group. It's been one of the best performers on the ASX for the last 20 years, and it's a property portal. They own the realestate.com website and app. Vendors list their properties on the site and they advertise for either rent or for sale. REA make money by charging them for that listing, and if you want to be higher up the search results, the vendor has to pay more. And really, when we're thinking about a business like this, sort of the key metric that we're thinking about is audience reach. At the end of the day, it's a marketing platform, so it really matters, the amount of people that you're bringing to the table. So we care a lot about audience reach, and we care about how that audience reach then translates into sort of share of industry economics for the business. REA is the dominant player in the industry. It's got around 50% higher audience reach than Domain. So it's got around 12.7 million unique average monthly users. And again, the more audience you bring to the table, the more you can charge for listings. So if you think about the actual revenue share in the industry, REA generates around 3 times the revenue of Domain. So it's got a 75% revenue share, but even more importantly, that actually translates to a larger share at the profit line. So REA captures 90% of industry profitability.
Wow.
Yeah, and profit's really important because at the end of the day, if you've got a higher...
We love profit.
That's the quote for the interview.
That's my one insight. But yeah, profit's really important because the larger your profit pool, the larger your margins, the more you can reinvest back into the business. So for REA, that's investing back in website and app development. It's investing more in marketing, all of which then leads to more audience, and it's sort of a virtual cycle of reinvestment that further entrenches their competitive position. So it's a really strong and established business model. If you think about it from the user's perspective, it doesn't cost me anything to go on realestate.com. So for me to switch across, I need some sort of incentive, and there's no incentive if the product functionality, the app and website are basically equivalent. The listings are basically the same, and I'm getting marketed to more by REA than I am by Domain. So I've got no incentive to switch across. So there are these really sticky customer habits that are really hard to disrupt if you're the number 2 player.
Well, my partner and I are currently butting heads because she uses Domain and I use REA.
I don't get people that use Domain.
I know,
it just
neither.
Feels inferior.
I know. Big sticking point in our relationship. Yeah. So let's not go down that rabbit hole. So REA is the first, I guess, and the one of the bigger parts of the News Corp business now, but we can just invest in REA directly if we want to. So let's move to the other News Corp items.
Yeah.
Most people think of it as a B2C produces media for people like us to buy, but a key part of its business is its B2B business, and that's Dow Jones.
Yeah. Dow Jones, it's a segment we're very bullish about. We think it's a really great business that's a little bit misunderstood by the market. There's been a tremendous amount of change that's happened in that business. So the key asset is really the Wall Street Journal in Dow Jones. So it's best to focus on that. And if you think about what's happened in the newspaper industry over the last 20 years, it's gone under a lot of change. So newspapers make money in sort of 2 ways. They sell a subscription to read the paper, and then they sell advertising in the paper. And if you flash back 20 years ago, the majority of revenue for newspapers used to come from advertising. They had these amazing little localized monopolies, extremely profitable businesses. Plenty of great investors made, a fortune investing in newspapers. People like Warren Buffett, Rupert Murdoch used to call them rivers of gold. But with the advent of the internet, a lot of that advertising revenue shifted online to digital players like Facebook and Google. I think newspaper ad revenue in the US peaked at around 80 billion in the early 2000s and has declined by 80% over the next 2 decades. So it's been this huge disruption and this huge headwind for the industry. And in response to that, they've all had to pivot their model. They've had to transition away from the ad reliant model to one that focuses on maximizing digital subscriptions. So one of the metrics we like to look at when we're analysing Dow Jones or analysing the Wall Street Journal is, what portion of revenue do they still generate from advertising, in particular print advertising, because that's been what's been most affected. And that gives us a good sense for, how far through the transition in model the newspaper is. So for the Journal, that's around 13% of their revenue coming from print advertising. That's a huge improvement considering that just 10 years ago, 40% of their revenue came from print advertising. If I compare that to some other players in the market, if I look at Nine's mastheads, they own Sydney Morning Herald and AFR. They generate around 20% of their revenue still from print advertising. So they're a little bit behind in that transition. The gold standard that everyone points to is the New York Times, which is separately listed in the US. That business generates around 9% of its revenue from print advertising. So it's a little bit ahead of the Journal, but both of them are pretty on par and definitely the leaders in the market in terms of getting through that transition.
And is your view that that's just going to go to zero?
Over time, eventually it will probably go to zero. I mean, maybe not zero. I think people really like reading physical newspapers. I'm one of them.
Yeah, same. But now they're $5 a paper.
Yeah.
If you don't have a subscription, it's too much.
Yeah. It's an interesting one because everyone thought that, Kindle would end up taking over the world of book publishing and no one would read physical books, but there's been a bit of a sway back to physical there. Papers, the economics don't quite work out as well, so it's becoming really prohibitive. It's too expensive, as you're suggesting. So I don't know, maybe it goes to zero, but it's certainly the riskiest bucket of revenue stream for those businesses. So you want to be careful because if you're buying, a business that's still got a lot of its chunk coming from print advertising, well, there's a chance that goes to zero, and that's a big headwind.
Harvey Norman's keeping them in business. The amount of print advertising that company does is ridiculous. It's just unbelievable.
The other thing we sort of think about is the competitive advantage, which really comes back to scale in newspapers. And we think about scale in terms of, the level of digital subscribers and the potential for digital subscriber growth. So for the Journal, it's really the world's most established financial newspaper. It's got 3.3 million digital subscribers. That's 3 times that of its nearest competitor. And as with REA, scale affords advantages. You can invest more in your newsroom. You can attract the best journalistic talent. You can spend extra money on the digital experience, ensuring that's right. You improve the product. It in turn attracts more audience and more subscribers, and it's a sort of self-reinforcing cycle. So we think it's got really good scale advantages. Importantly, there's plenty of room for subscribers to grow. Management have estimated the addressable market at 12 million digital subscribers. That's 3 times the current base. So a huge runway there. And it's interesting to think about the actual, the customer cohorts for the Journal. It's a business newspaper. So I think their 3 largest customer cohorts that they give, or subscriber cohorts, I should say, are financial advisors, retirees, and people who work in finance. I don't know why they separate those two, but they're the 3 largest cohorts. And if you think about that, the Journal's a really vital source of information. It's a really key piece of information for their business. It's a core business expense. For the retirees, it probably shapes the way in which they manage their retirement savings, and it's a tool for wealth creation for them. And that's a really different sort of subscriber base versus something like, say, the New York Times, which I think is really, really beneficial and speaks to the sort of pricing power dynamic. I look at my own reliance on the AFR in Australia, and I can't imagine unsubscribing from that. I really need it for work. So they've got a lot of pricing power. So I think that's really interesting to think about. You've got not only just a really good long-term subscriber growth story, but also a good pricing power story there as well.
The third big section of the business is HarperCollins. So how do you kind of look at that?
Yeah, so HarperCollins, it's the world's second largest consumer book publisher. And, when I think about the book publishing market, it's an oligopoly. There's 5 big players. So they're often called the big 5. You have Penguin as the largest, HarperCollins, Simon & Schuster, Shea Livray and Macmillan. And those big 5 compete with one another to acquire publishing rights from authors. And they do that by offering advances, which are just big sort of lump sum payments. And, as with Dow Jones and as with REA, scale is, again, the really important factor that drives these businesses. For book publishing in particular, it's the scale of your backlist or your back catalogue, because that's sort of a really vital revenue pool from which you can then go and invest in new projects. If you think about book publishing, only a very small fraction of books published are ever commercially successful, which means you really need a big backlist, a big pool of revenue to go and make a lot of really small bets. A few of those bets will pay off. So I look at HarperCollins' backlist, and it's a collection of classic authors. You've got J.R.R. Tolkien, you've got Agatha Christie, C.S. Lewis. Those are authors that are going to be generating revenue not just in 10 years, but in 20 and 30 years. And it's this really hard to replicate pool of revenue that can be reinvested back into the core.
Yeah, right.
You've got Equity Mates.
Not yet.
So they're the, 3 big businesses and how you think about it. But when most people think about News Corp, they think about the Australian newspapers that, they walk past most days.
Yeah.
How do you think about them, or do you think about them at all?
Well, at the end of the day, they're not really material enough to make a big dent in your valuation. So it's not an area I spend too much time looking at. And, if I think about, so the Australian is in the news media segment for News Corp, and that, the valuations there might get to, 3 to 500 million, but it's just one paper in that segment. They've also got the New York Post, they've got the Sun, the Sunday Times in the UK. So it's a tiny segment, and it's an even smaller part of a tiny segment. So I don't spend too much time thinking about the economics of something like the Australian. So yeah, it's not big enough.
All right, Will, let's move to the bull case. When you're thinking about competitive advantages and building an investment thesis for the bull side, what does that look like for News Corp?
Yeah, I think the sort of the key bull case for News Corp is that you've had this immense transformation in the business over the last 10 years that's vastly improved the quality of the business, particularly in Dow Jones more than the other segments. And, I think that improvement in quality has been, largely overlooked by the market, a bit misunderstood. And it hasn't been really reflected in the share price. If you look at News Corp, it's really a collection of some very high quality businesses, but they're trading at bargain prices. So at the end of the day, the bull thesis really comes back to how attractive the valuation is. And just to put some numbers around that, so if you go and apply a New York Times multiple to Dow Jones, we think that's defensible for a couple of reasons. For one, Dow Jones is actually it's a higher profit margin business, and it's got a better track record. There's a little bit of difference in Dow Jones. They also own a professional information business. Anyway, we'll sort of leave that to one side rather than get too into the nitty gritty. But if you apply that multiple, the New York Times multiple to Dow Jones, and then you take the market value of News Corp's stake in REA, you basically get to the current share price. So that means you're getting theoretically the rest of the assets for free, and those assets hold immense value. You're getting HarperCollins, which we've discussed. It's the world's second largest consumer book publisher. It's a really attractive business, really capital light. It generated around 350 million of EBITDA last year. You're getting an 80% stake in Realtor.com, which is basically the domain of the US market. It generated $700 million in revenue last year. CoStar were recently in talks to buy that business for $3.5 billion.
Really?
So, they're just a couple of the other assets in there, getting the other news media businesses. There's plenty of more value on offer, and you're really not paying anything for it. Another way to potentially think about it, some listeners might say, well, look, I don't want to buy REA at that share price. I think it's too high, it's too expensive. And I think the way to think about that is, well, if we apply what we think of fair value for all of the assets that News Corp own, excluding REA, you can reverse engineer the share price you're effectively getting REA at. And that, based on our assumptions, works out to be around $60 versus the current share price of 130 or 140. So we think News Corp's it's a fantastic opportunity to buy one of Australia's best businesses at 50 cents on the dollar.
So that's the bull case. The bear case I'm interested in, and for me, when I think about News Corp, it's a collection of great businesses, and let's exclude REA. Outside of REA, they all seem to be facing their own headwinds. Like the news media, we know the headwinds they're facing. Book publishing, their margins are getting squeezed by Amazon. The physical books being disrupted. Foxtel is being disrupted by streaming. They're kind of disrupting themselves, but what's the margin story there? It feels like for every individual segment, you could sort of talk about the headwinds there. So tying it all together, outside of REA, what are you most concerned about investing in this company?
Well, so to address some of those points, if you look at book publishing, for example, it's interesting. Everyone's obviously got concerns over Amazon's purchasing power and the potential shift to digital books and what that means for the industry. And again, sort of, concentrated purchase power from their key customers. Obviously, News Corp was a separately formed entity when it split off from Fox, but you can go back and look at News Corp's history before that. And they've owned HarperCollins for something like more than 20 years, and its EBIT margins have been basically flat over that whole time. So it's actually, they've made some acquisitions which have helped. So maybe the underlying margin has declined a little bit, but margins have been pretty steady. So that's sort of how I think about that. In terms of the other headwinds, something like Foxtel, Foxtel's it's a business that is facing a lot of headwinds. I definitely agree with that. I think they've done a great job operationally. They own KO and Binge, two streaming brands that have really taken off in Australia. But they're certainly at it's not the best competitive position to be in.
Just on that, you mentioned that the Wall Street Journal, people won't give up their subscription. You mentioned the AFR, you wouldn't give up your subscription. Bryce and I often talk about how KO is going to be the last subscription for us to go. Like, it feels like that's a pretty rusted on one. They've got a lot of pricing power and they're flexing that muscle at the moment as well.
Yeah, they are. The hard thing with it though is, part of them flexing that muscle is, on the other side of that, them having to pay more for sports rights.
Yeah,
So, I'm not sure who's benefiting more from that arrangement. Is it the sports themselves or is it KO? It's probably a mixture of the two. The thing with Foxtel in terms of thinking about News Corp is there's a lot of debt sitting in that entity. So when most people think about the valuation, they say, well, maybe the enterprise value is 2 billion or something like that, but it's got, more than $1 billion of debt in there. So it doesn't end up, and it's non-recourse debt. So it doesn't end up actually moving your valuation that much just because that's where most of the debt in News Corp sits. It's in that segment. I think it's a business that's interesting because it has sort of turned the corner in terms of, streaming as a percentage of revenue, but it's a business with a lot of debt. So it again doesn't move the needle that much.
Okay. And then the final element that I raised earlier was just the news, the headwinds in news media, and Wall Street Journal and New York Times seem to hang on to their subscribers, but is anyone else what the future of news and off the top of my head, I'm going to completely butcher the stats, so I'm not going to say them, but the amount of newspaper closures in the US is it's incredible. And when you think about the industry, there's probably only going to be a few newspapers with the requisite scale to survive, this decline in advertising revenue. So, when I think about the Journal, it's clearly one of those businesses. Again, it only generates around 13% of its revenue from print advertising. So it's mostly through the transition. But on the other side of that, in some ways, it's a good thing for the Journal because, so many papers have closed down and can't afford to scale in the same way that you've actually got a reduction in competition there.
So, Will, let's talk about the long-term plans then. If news is to be successful in its, I guess, ambitions over the next 10 years, what do you think the company looks like in sort of a decade?
Well, I think the company looks very much the same as it does today, but hopefully with much higher earnings. I mean, the thesis, our investment thesis for purchasing News Corp isn't predicated on any change in the business. It's purely predicated on the continuing sort of fundamental performance of the business continuing to the future, and that's supported by three key segments with very durable competitive advantages. Book publishing's been, earnings in that business have been very, very stable, growing slightly over the last 20 years. And if you think about the durability of that competitive advantage, they should be the same in 10 years. The Journal, again, it's been around for 133 years. I don't suspect that my reliance on financial information as part of my job is going to change in 10 years. I think I'll still be a subscriber to the AFR, and I suspect most of the Journal subscriber base will be the same. Prices will go up, likely to account for some of the lost advertising, but again, given how important that information is to running your business, you really don't have a choice but to stay a subscriber. And then I think about REA. I think most people are pretty familiar with the quality of that business and just how enduring that competitive advantage is. So, for the business to succeed in 10 years, it's just got to keep doing what it's doing.
So when we talk about long-term plans at News Corp, and especially the ambitions at News Corp, we have to talk about the proposed merger. Rupert's trying to get his empire back together. Would a News Corp and Fox Corp merger change your thesis? Would it make you more bullish? Would it make you more wary? How do you think about that possibility?
Yeah, we didn't see much of a commercial rationale for the merger. I know they talked, sort of publicly about how scale matters, and scale does matter, but it matters at the individual business level, not at the conglomerate level, in our opinion. But the special committee that was meant to be presiding over the potential merger, we never actually got anything out of that. So we don't know what the terms of the merger would have looked like, but had it just been a straight up merger, we wouldn't have been supportive of that. And I think most investors, who spoke publicly about it, and there were a lot of investors who did, a material portion of the News Corp share base sort of came out against the merger. We think we've got, some fantastic high quality businesses that are really undervalued with News Corp. We don't want to dilute our ownership of those businesses by merging with Fox. we're not as confident about the Fox business model and its valuation, so we want to just hold on to what we've got. Had the merger, included some sort of premium or something like that, of course, that changed the dynamic, but just as a straight up merger, we didn't see much of a commercial rationale, and we really like our assets in News Corp.
Well, speaking of rationale, the purported rationale, alleged rationale, was all about the succession planning and making sure that Lachlan could take over the full business. Rupert's 92. We've got to deal with the reality of, he may not be around for much longer, or may not be in charge for much longer. Would any succession drama, any succession change, would anything there change your thesis? Or is it the quality of the assets will shine through?
Yeah, I think when most people think about potential succession, obviously the merger is one thing, and we can put that to a separate side. I won't speculate on their individual motives.
No,
but,
I'll speculate. You don't have to speculate.
But any sort of change in control of the trust structure, whether that's Rupert passing on or whether it's something else that happens that results in a change of control, I think most investors would look at that as potentially a positive. And that's for the simple reason that a lot of people would acknowledge there is some really good value in News Corp, and they're looking for a catalyst to unlock that value. So if that is the catalyst that unlocks that value, I think it'd actually be positively received by shareholders.
Nice.
Well, Will, thank you so much. It's been an absolute pleasure unpacking News Corp with you. We've thoroughly enjoyed it, and I know a lot of our audience would have taken a lot of value from that as well. So we do really appreciate the time. Thank you very much.
No, thanks for having me, guys. That was great.
Thanks, Will.
Nice, Ren. Well, we will leave it there. As we said at the top, thank you to Airlie for supporting this episode. Airlie has an active investment style that aims to deliver attractive long-term capital growth and regular income to its investors. It was started back in 2012 by John Sevior, so make sure you go and check out that episode. But yes, they've just launched the Airlie Small Companies Fund, which is managed by Will Granger. The fund typically comprises 20 to 40 investments that Airlie consider to be high quality businesses. So check out the link in show notes for more information, and thank you to Airlie for supporting this episode. But Ren, we'll leave it there. We will be picking it up on Monday with a review of our bold predictions and stock of the year, given that we're halfway through the year, and we chat with Andrew Brown to get his thoughts on where markets go from here. So make sure you tune in on our Monday episode. But Ren, always good to chat stocks. Pick it up next week.
Sounds good.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.